Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, August 7, 2020. And here are our top stories. E-commerce hits lightning speed and we'll discuss the future of telehealth. Joining me now to discuss this and more is Devin Banerjee. He's Senior Financial Services Editor for LinkedIn. He's also the editor of the This Week in Finance newsletter. Devin, thanks so much for joining us in the program this morning.
Always good to be with you, Jeff. Thanks.
Yeah, it's always great talking with you. Love talking about the latest trends on the LinkedIn platform. I think we're going to talk about e-commerce and how it has now hit warp speed or lightning speed. I don't know what the right terminology is, but it's going fast.
That's absolutely right. It's certainly accelerated, and we got a lot of data and insights into that pace of acceleration in recent weeks with earnings reports from a lot of the credit card companies, payment processors, and others. And we saw a really strong conversation about this topic on the platform. So, if you think about it, millions of business owners around the country are making this calculation right now. Maybe they used to sell wholesale or they used to sell in brick and mortar locations. And now, things have shut down the past couple of months, the past 5-6 months now. And they realize they really need to sell online, direct to consumer. And as I said, this is showing up in those earnings reports. I'm going to go through some really interesting stats that have come out from some of those fintech companies, payment processors, card companies. So, at PayPal, they said newly active customers, so, primarily pandemic-driven activity, newly active customers frequently using PayPal services, that's 4 or more times in the course of like a week, has surged 30% this past quarter. Dan Schulman, the CEO there, saying it's not a hyperbole that we've seen a 3 to 5 year acceleration. He says that's just the math. So, we talk about, you and I, these trends that are accelerating by several years. I mean, he's seeing, 3 to 5 years out, what their plans were are taking place now. Global Payments, the huge payment processor, saw revenue from its online payment processing surge to a quarter of the firm's total, 25%. Its CEO, Jeff Sloan, saying that was always our plan, but that was our plan several years down the road, 2 years down the road, to have a quarter of that payment processing activity coming from online activity happening now. So at Visa, online spending, and every week since April, spending excluding travel, every week since April, so the past several months, has been up 25% year over year from the same week a year ago. Shopify, new stores on its platform, up 71% in the second quarter from the first quarter. And look, overall, spending on credit and debit cards is down. Overall consumer spending has been lower. But great quote from Sachin Mehra, he's the CFO at MasterCard. He said what they're seeing is really muscle memory building up in consumers right now. As consumers' options are limited, they're not going to the store. They're realizing that the online experience, can work for them. And so a lot of these card companies, these payment processors, these fintech operators are going to benefit from this period. You're seeing that in the stocks. All those companies I just mentioned, if you look at how their shares are performing relative to the overall market, even relative to the NASDAQ and the other tech indices, I mean, these companies are candidly really having a great time right now. And there's so many ripple effects of this, which we can get into on the brick and mortar business, department stores, malls. I mean, there's a lot of pain to be had. We're seeing that with the bankruptcies that have been filed in recent weeks and months. But, kind of this bifurcation and this divergence is happening in this space as well.
Yeah, I was going to ask you about the malls, Devin. I mean, I think they're open here in New Jersey. I think some of the malls are reopened. I don't know if people are going there. Maybe they're going out there to take a walk and to see what's there. I don't know what the sales are like. I mean, how do you adjust if you are a store that only has a mall storefront and you don't necessarily have a huge online presence? What do you build it out, or do you partner with an Amazon or some other company to sell your product? I mean, how do they adjust to this?
Yeah, I mean, it's really that shift to online. But the interesting and unfortunate thing is that those who have been a bit flat-footed and haven't done that quickly enough, it's hard to catch up now, and they're suffering. So you're seeing those department stores that have still been hugely reliant on malls and foot traffic, like a Lord & Taylor, which just this past Monday declared bankruptcy, or in May, we saw the same types of filings come out from JCPenney, Neiman Marcus. They've just been caught flat-footed. They haven't partnered with online, channels, or they haven't created their own online channels, and that's really hurt them. And as I said, this ripples over to malls, which you mentioned. And at the turn of the century, about 20 years ago, I saw some data this morning. There were about 3,000 malls in the U.S. Today, there are fewer than 1,000. And one retail consultant quoted in the New York Times predicts that only a few hundred of the strongest malls will still be around in the U.S. a decade from now. So to your question about how malls are going to adapt, it's really those in the best locations as developers think about malls. It's really location, location, location. And for existing malls, it's pivoting to be mixed use. So not just retail, not overly reliant on retail. You're going to see dining, fitness, entertainment, co-working spaces, healthcare services. We've seen that really pick up with all that space in malls, the parking lots of malls. Logistics is going to be huge. Those fulfillment and distribution centers for their online businesses. They can take mall space, which is always in prime locations and kind of last mile close to those consumers. So there's a lot of pivoting that can be done and is being done for mall owners, developers, and as you go down the chain, those folks have lenders, the banks. And so, the chain of effects really continues to banks, which then, if they're struggling with their loan books, they're going to tighten standards, including on consumers. And so, there's a lot of stakeholders in this chain, and a lot of pivoting that needs to be done.
Well, thanks, Devin. And when we come back, we're going to talk to Devin about telehealth. Is its future as rosy as it's cracked up to be? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you are like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Devin Banerjee, Senior Financial Services Editor for LinkedIn. Devin, thanks so much for staying with us this morning.
Absolutely, Jeff. Happy to.
Yeah, a lot of change, a lot of fast change when it comes to e-commerce. One of the areas that's also changing, Devin, as a result of this pandemic is telehealth. A lot of Americans seeking doctor support, doctor health through video conferencing, kind of like what we're doing right now. But it's not as rosy a picture for all as many would expect. What can you tell us there?
Yeah, absolutely, Jeff. Let's start with what's been going on the past few months. Millions of Americans have turned to telemedicine, video or telephone calls to talk to their doctors, interact with their doctors. The big question is, how long is this going to last? And really the big question under that is around insurance. So, right now, because a public health emergency is declared due to COVID, Medicare coverage has been expanded quite a bit to include services like telehealth. The private insurers typically follow the lead of the federal government in terms of coverage. And so they have expanded their coverage areas as well to include services like telehealth. But if you think about it, this expanded coverage is slated to end when the public health emergency ends and when COVID does cede. So some of the nation's largest insurers recently, these include United Healthcare, Anthem, they are saying that they haven't decided how long they are going to extend that expanded coverage. Mm-hmm. They may not expand it beyond September or October, United and Anthem are saying. And so that is the big question. If you think about what medical providers want to be reimbursed for, at what rate they want to be reimbursed, they really are looking to those insurance companies. Now, some good news, there is actually broad bipartisan support, believe it or not, for expanded coverage of telemedicine. Seema Verma, who's President Trump's administrator of the Centers for Medicare and Medicaid Services, support continuing down this path. She supports staying the course. That includes reimbursing doctors or reimbursing them at the same rate for virtual visits as for in-person ones. She supports, continuing to relax the rules for who can use telemedicine and can be reimbursed for it. But actually, there are all these bills that I've written down. There have been about 20 telemedicine bills introduced in both the House and the Senate just since May, from folks like Ron Wyden, Senate Democrat, just last week from Lamar Alexander, Senate Republican. He unveiled the Telehealth Modernization Act. But the other big question is what is the cost of all this? Of course, that's what policymakers are always looking at. Lawmakers are reluctant to add to Medicare's budget, which is already about $750 billion a year. There's also the insurance lobby, quite a strong lobby. If you think about private insurers, they have really viewed telehealth as a cost reduction avenue. Unless it's required by state or federal governments, they'll try to reimburse less for telemedicine than for in-person visits. And so that's where they really saw their future with telemedicine. So a lot of things in flux. Of course, there are a lot of those bills. There are also a lot of kind of social elements to this and how consumers can access telemedicine, whether they have internet connectivity or even things like cell phone minutes, the cost of that, the complexity of the technology. And also lawmakers are studying very closely the potential for fraud. If you think about it, does a phone conversation with the front desk at a doctor's office confirming your visit or following up on lab results, are those billable minutes for reimbursement? There are a lot of kind of interesting questions that we haven't really had to delve deeply into until, again, this pandemic has accelerated that trend.
Yeah, I mean, this is a perfect story to what we talked about on the complement to the e-commerce story, because we have now moved very quick, in my opinion, in the healthcare arena in order to satisfy customers. And it seems like, just listening to and reading the article that this is kind of based off of, Devin, articles this is based off of, that maybe the regulatory and legislative environment's a little bit slow to catch up. Maybe there's a little bit of the resistance to change. But it seems to me, Devin, that this telehealth is the future. We'll still have visits. I mean, I know I talked with someone the other day about you still have to go to the doctor to set your fracture. You're still going to have to go to get a procedure. But this is like that first step. And you look at what Walmart and CVS and others are doing to kind of bring some of those visitations into the store to create some cost efficiencies. But the future is clearly telehealth, and we need to be able to figure out a path forward. I'm just worried that the doctors are going to get squeezed or not paid back and reimbursed. That's going to drive them to that problem we talked about several months ago, which is those rural deserts where you don't have doctors for large expanses.
Yeah, absolutely. Medical deserts, is a huge issue. But you're right that it's all about incentives here, and so lawmakers are really trying to figure out how to put the right incentives in place for the insurance companies, which then put incentives in place for the providers, the doctors, which then can provide optionality for consumers. What's interesting is in the investment landscape, investors are super excited about this, and they have really driven a lot of either consolidation or in the venture space, the creation of new providers or service providers around telemedicine. Actually, just this week on Wednesday, a huge $18.5 billion merger announced by Teladoc and Livongo, two huge providers of telemedicine services and other data services for consumers to understand their own healthcare better. The CEOs of both of those companies said that deal just came together over the past few months. They realized they were both on a huge trajectory and they were going to either compete or combine to be a stronger provider of those services for consumers. Each of those individual companies, both listed public companies, have been quite active themselves in investing in other smaller providers or in pursuing their own M&A and consolidation. So, and then as I said, in the venture space, this has been quite an exciting area. So I think those big pools of capital also will drive quite a lot of innovation, candidly, in this space.
And in some cases, much needed innovation. I think we've been looking for this disruption. Devin, amazing stories this week. Thank you so much for sharing your perspective. Appreciate it. And look forward to having you back on the program very soon.
Absolutely, Jeff. Thanks.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. Don't forget, we're back again tomorrow for the BRN Weekly Retrospective Show. We'll be taking a look at some of our best segments of the week and talking to a very special guest. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.